Right, coloration of the cells, look what they're turning. They went from bluish to now more green. So we have a bullish bias on gold, and we've been bullish on gold for quite some time. How's it going, fellow traders? Magic Trader here, and welcome back, welcome back. We've got another edition of the latest CFTC data analysis for you. And latest set of data was from June 4th, 2024. And as we always like to do, I always like to look at the brief snapshot. We look at the change column and take a look at what was the biggest change from previous positioning. And what we can see is S&P 500 had a massive change, bearish, 121,000 in the minus. We also look at bonds and we see a minus 101,000. And we look at oil, minus 58, and we look at US dollar, Japanese yen, very bearish with a negative 60,000 move. So now that we have that in mind, why don't we start by taking a look, as we always do, at gold. Here we go, gold. Let's take a look. Positions on the long side. They were massively long with 300,000, okay? But remember, maximum size is quite larger than that. 300,000, maximum size is 400. So really, they have more upside potential here if they want it. Right, coloration of the cells, look what they're turning. They went from bluish to now more green. So we have a bullish bias on gold, and we've been bullish on gold for quite some time. But now the coloration of the cells are starting to turn green, which is telling us that the banks are starting to become stronger with their bullish sentiment. Look at short positions. They've gone very cooled off with these latest cells. The coloration of the cells being blue, meaning that their positions are very cooled off when it comes to shorts. So longs are the aggressive position, but over the last couple of weeks, what do we see with their positions? They've been decreasing them from 300 down to 284,000. So what are we expecting right now? Well, let's look at the chart. I've been mentioning to you that for quite some time, we were going to get some ranging here for the month of May, to be specific. We were expecting some ranging, and we got that ranging. Okay, now we're just at the bottom end of that ranging. So we're still very bullish, and we're at the bottom end of the ranging. What I'm expecting is either one of two things are going to take place. So let's zoom out. If price is going to drop, and there is a chance of that, this ranging will have to break first. Okay, if that range breaks, we expect the drop all the way down towards the 2065 area. Okay, and then a massive move to the upside. Otherwise, what would have to happen is a break of the range to the upside, sustained, has to be sustained, meaning price has to close above previous highs, and then we'd expect a very large move to the upside. But, you know, at this point, we're just stuck in this range. So we're being patient and we're watching with the understanding that they are very bullish right now with their positions. Okay. And what about the retail traders? They're about 53% short. Nothing to write home to. So there's not much going on there with respect to retail sentiment. All right, let's look at oil. What's going on? So price declined from the highs after the banks accumulated a strong long position. And you can see that strong long position here in the long column with 411,000. There's been a steady decline ever since. That's profit taking on long positions, which is fueling this move to the downside. So what else we got? Well, like I've been pointing out on the higher time frame charts, we have supply above, and below price we have demand. Okay, this is a massive range with oil. Now, do I like this? No, I don't. Obviously, I don't, because you look at oil, what do you see has been happening since early 2020s? Price has just been maintaining this range. So unless this range breaks out, we can't really expect much from price. It's going to sit in the range. And as long as it's in the middle of it, price can move up, price can move down. It can do whatever it wants to. Right now, the bias is pressure to the downside because the banks have been taking profits on their long positions. All right, so we move along. US dollar, what do we see? So here we see a steady decline in their positions. They were in the high 30s. Now they're down at the low 20s. Profit taking on short positions. And as that's been taking place, price has been declining and now pausing. So what are we expecting? Well, listen, the last area of supply that was contacted was up here. It was contacted once, contacted a second time, price declined. On the higher time frame charts, we have supply up here and we have demand down here. So is it ideal to trade right now? No, it's not. Why? Well, because it's in the middle of the ocean, as I like to say. Look at the coloration of the cells here. What do you see? It's somewhat with a tinge of red in it, but there's also blue. Mix the two together, what do you get? Purple. So that means a little bit of bearish pressure, but at the end of the day, more neutral. All right. So if the institutions are neutral, then maybe we should be neutral. And I am currently neutral, the dollar. Aussie. So we were talking about the Aussie being super aggressive with short positions not too long ago. I told you that they would have to close off those short positions and that was going to fuel a move to the upside. And that is indeed what took place. Them closing off a bunch of short positions caused a move to the upside. So let's keep in mind that at the end of the day, we do have an institutional demand area that's in play. Okay, but let's also pay attention to the coloration of the cells here under the long and short percentage. They were bearish, as you can see, with numbers in April reaching as high as 80%. But now look at shorts in June 4th, okay, 67%. You see how the coloration of the cells are becoming less and less red? So this is not a time, in my opinion, to be trading the Aussie, okay? And if we look at retail sentiment, they're about 69% short right now at about 5.8K lots. Not really aggressive, not really giving us any indication of the next moves to come. So we move along and we have USCAD. And this is something that we should be paying attention to, because if we look at USCAD, what do we see? Look how aggressive their long positions are. Okay, back in April, 119,000. Look at them now. June 4th, 128,000. Now, why do we care? Well, we care because look at their maximum positions on longs, 137,000. We're pretty much there, okay? We're pretty much there. So at these highs, if they're reaching these maximum long positions, what do you think the natural inclination for price will be? Natural inclination for price will be a push to the downside, okay? And look at the coloration of the cells here under the long and shorts, bullish. They were neutral, they became bullish, super aggressive, 78%. This is coming near a time where they're going to have to start taking some profits. And when that happens, it's going to fuel a move to the downside. And that's what we are expecting. Retail sentiment, 64% of them are short at 5.8K lots. Nothing aggressive, nothing to really indicate price direction. But just remember what I told you about USCAD here. US Swiss, take a look at the long positions, aggressive. Look at shorts, very cooled off. Not much here, okay? Except for longs have been the driving factor here. Look at the coloration of the cells here. It's the same thing as USCAD. They went from neutral to bullish, and now they're 87% long. 87% long. Now, yeah, maximum size is 89,000, so we're quite a distance from that. But if they start taking heavy profits on their USCAD positions and it forces a move of price to the downside, what do you think will likely happen on this chart? Okay, very high odds we'll see this drop as well. US Swiss right now, 65% are long retail traders, 2.8K lots. That's really peanuts in the grand scheme of things. Okay, Euro. So this one's very tricky. Very, very tricky indeed. We saw a big push to the downside this week and then a reversal and a push up because of data. So what are we seeing in terms of the banks? That's what's really important. Well, I could tell you that longs have been something that have been focused on for quite some time. The latest phase of positioning is they've been adding to their long positions. Okay, so that's important to know. At the same time, when we look at their short positions, what have they been doing with their short positions? Lately, they've been offloading their short positions. They used to have 177,000. Now it's 121,000. Okay. Let's look at the coloration of the cells here. They used to be bullish here and then becoming less so, and then starting to slowly increase again with their bullishness. Okay. You can see that represented here in net positions as well. Very aggressive net positions to the bullish side. It became bearish for a little brief stint and then all of a sudden bullish again. So overall sentiment from what we're seeing with the euro US dollar is bullish sentiment. Okay, bullish sentiment. Let's look at the euro retail positions. 60% short at about 24,000 lots. That's decent size, but 60% is not committed enough. That number is only that number because of the strong move that we got recently to the upside from CPI data. All right, folks, let's take a look. Pound. Look at the aggressiveness with the long column. Okay, pretty much what we were seeing with the euro, where they were starting to accumulate an aggressive position again. So 102 all-time maximum size is 135, so we're quite a distance away from there. Bullish bias became neutral for a quick little bit, about a month and a half, and now we're starting to get bullish again. So bullish bias is what I'm seeing. Okay, early indications of that. They're going to continue to accumulate a long position, and then we'll see what happens. Retail sentiment 87% short, 17K lots. That's pretty big. It's pretty big, and that means we could potentially get a slight drop to the downside to shake off those short positions. Okay, and then possibly a continuation of the move to the upside. Okay, but we'll continue to monitor that one. US dollar, Japanese yen, what do we see? Well, we know that major supply was contacted. You remember that? We pointed that out. We had this mapped out. Major supply has been contacted, so pressure was to the downside until it contacted demand. And then pressure was back to the upside, and now what do we have? We see they were aggressive with their longs, and they took profits on them. That's what caused that initial push to the downside. But look at shorts. You think they're even focusing on shorts? Not even the slightest. And what were we talking about with the USCAD, that they'd have to take profits on long positions, right? Well, recently they reached almost a maximum size with their long positions. So this one's already started to take profits on their long positions. So the expectation is that they will continue to take profits on their longs. And if that does take place, then price will decline. US dollar, Japanese yen, retail trader, 62% short with about 2K lots. Not much there to determine a reversal anytime soon, at least. And last but not least, Kiwi. Longs are aggressive, shorts are becoming less so. And look at the coloration of the cells here. We used to be neutral, a little bit bearish, now a little bit more into bullish territory. All right, so I want you to remember that. Put all those things together. You know, also retail positions short, 88%, massive. 7,000 lots. That's pretty big. Decent size, okay? Decent size. That'll probably fuel a move to the downside short term. But it looks like from what I am seeing, the biases are pressure to the upside with the euro, the pound, and all that stuff. Okay, and downside pressure with the dollar pairs. We'll let the data continue to build. We'll let them continue to give us more information with the reports. We'll do more analysis on it. If you want a full breakdown of the analysis, you can sign up and become a member with us at www.whiteoakfx.com. That's it for now. Enjoy the rest of your day, and we will talk to you soon. Take care, everyone.